You know, if you want to get nowhere in life financially, you should focus on single-digit returns. But if you want to actually get somewhere, then you got to learn how to nail it on double-digit returns. And you know what? 401ks can't do it, IRAs can't do it, the stock market can't consistently do it. So what can? My name is Kris Krohn, and on this channel, I'm here to help you establish and build incredible wealth in your life. It's created financial freedom for me now many years ago, and I want to show you how it can do the same for you. Today, we're exploring the conversation of how and where do you find double digits? Why are those double-digit returns important? And with the rule of 72, how can you start multiplying and doubling your wealth every 3, 4, 5 years? All of that's coming up next in today's video.
'Cause we're gonna be legends. What we're doing here ain't just scary. It's about to be legendary.
Some of you are probably curious, what does it mean to have a double-digit return, and why is that even significant? Like, Kris, is it really important? I think it's a really good question, and if you and I aren't clear on this, then I shouldn't give you the rest of the information. So let me kind of clean this up first. By the way, I have the Monopoly token dog, the Scotty dog here. It is a symbol of tremendous luck. It rolls snake eyes for me all the time, and I win Monopoly 87% of the time because I have rules and I have standards that I live by. Today I'm going to share with you some of my financial standards. This is the big one right here. What is society asking us to do with our money? Right now, we're asked to put money into a variety of different things. We put money into things called 401ks. We put our money in things called IRAs. We put our money into annuities. We're also taking our money and we're putting it into home equity. So actually we're working on like paying down our mortgage. There are some people that are actually taking money and they're putting it in like gold and silver and some things like that. And here's the problem. Like, this was the thing that kind of, it upset me. It rocked my world. Frankly, it pissed me off when I learned that we work our butt off for money, and then whatever money we get, we're asked to do something for by all the other people in control of our money. For example, the people that want your money in 401ks, those 401ks are historically producing a 4 or 5% annual return. Now, if you know what the rule of 72 is, it means that you can take that return, divide it by 72, and it'll tell you how many years it'll take for your money to double. Bottom line is it's going to take a really long time for your money to double. Your IRAs are producing around 4 or 5%. Your annuities are usually producing 3 to 4%. If you're working on paying down your mortgage, then all you're trying to do is avoid a payment. You're actually getting nothing, no return on it. You might be getting appreciation in your area, which real estate across the board is usually growing at 3, 4% the rate of inflation. Gold, it can go up, it can go down in value, but it typically is not growing even at those rates. So you're not really even getting anything there. And here's the problem. For you to develop any like level of financial freedom or ability, step one is you got to be saving a big chunk of your money, and then you got to be investing it. These are not investments. They break some of my rules. Here's the first rule. Does your 401k pay you money every month? No, it pays you nothing. Meaning, if you put money in, every month it's not cutting a check back to you. It doesn't give you anything in return. So it's speculative. That would be like buying a piece of land to hope that it goes up in value, but during the holding period, it's actually extracting more money from you. Think about what that means, extracting more money from you. What that means is that it's actually costing money out of your pocket. Your 401k you keep contributing to, but land, you got to pay your taxes on it. So if you take a look at annuities, they're paying 3 or 4%, but they don't even pay out. It's not even cash in hand. So you're not even getting that. Your mortgage, you're not getting anything when you pay down your house. Your gold doesn't give you anything. It doesn't give you little specks of gold because it's growing. None of these things classify as an investment. They don't pay anything. It's really a weird thing that we do. Some of you want to know why I'm a fan of like real estate, or why I'm a fan of, I'm going to see, how would I draw business here? I'm going to just draw a house and put a B on it. And on this house, I'll put an I for an investment property. When I buy an investment property, every month it actually gives me something. It gives me cash flow, and it also gives me tax benefits. And it also gives me an ROI. It gives me growth. So there are things that I get from it. Business done correctly, it actually has the ability to give me a lot of money on a regular basis, and including a lot of other benefits. So I put money in, and what do I get back? I get something back. Rule number one to investing is if you put something in, you should get something out. And you need to then know, well, well, these things, are they going to give me ultimately what I want? I'm just pulling up my handy calculator here, okay? And if I take 72 and I divide it by 5%, it's going to take me 14.4 years for that money to actually double itself. If I'm only earning 3%, then I take 72, I divide it by 3, and it's going to take me 24 years before I actually double my money. I know it's a little fuzzy, but here's the bottom line. Think how hard, are you saving $20,000 a year and then in 24 years, it's gonna double again to 40 grand? Dude, this is how people get in their 50s with retirement on the near horizon. They start panicking and freaking out saying, dude, there's no way I'm gonna get where I wanna be. Which means, pattern interrupt, you gotta come up with the plan. So I wanna share with you what that plan is and how we change the game. So come take a little walk with me over here and let me kind of show you what this looks like. In this document right here, I've documented the last couple thousand deals that I've done. Literally, you can actually go through this thing and I show you pages and pages and pages of deals, addresses, and what I've actually done, and then an explanation of track record, my overall ROIs, and actually what's possible out there. Right now, my average ROI based on my last 2,000 deals, let's look it up. It came out to actually a really strange number, 25% on the dot. My average cash on cash ROI is 7.9%. My average purchase price, $143,000, okay? Why do I like double-digit returns? I'll show you why I like double-digit returns. It's right here on my phone again. It's rule of 72. It's this magic thing that can calculate compound interest of how long it takes to double money. Let's say that I'm earning now 25% of my money. That means I'm doubling my asset every 2.88 years, which means every 3 years I'm doubling my money. I want you to think about that for a moment. It's not 20 years, 17 years, or 24 years. Now, by the way, this might not happen. There's risk. The investment might go bad. This may not work. That's a risk. But the greater risk is doing nothing because you're guaranteed to know what you're going to get, which is I'm never going to retire. So, by the way, I'll happily take risks every single day. What I'm trying to learn how to do and what I'm teaching you how to do here is how to take calculated risks and be smart with your money. So imagine this game plan for a moment so I can actually show you what this looks like. Let's just assume, for all intents and purposes, that you took money in a 401k or IRA and you decided to buy 3 properties. Now, these 3 properties, let's say they're each producing, this one's producing $250 a month, this one's producing $300 a month, this one's producing $200 a month, but collectively, they were earning a 25% annual ROI. Well, that means that in 3, 4, 5 years, these 3 homes are going to do what? They're going to double, which means that I can sell them and I can now trade them for 6 homes. And if those 6 homes are each producing $300 a month, 6 times 300 is now what? It's $1,800 a month. But at those ROIs, what happens to those 6? They become 12 properties. And those 12 properties, are now producing $3,600 a month at $300 a piece. But they're also continuing to grow and double. 24 properties is now producing $7,200 a month, almost $100,000 a year. And I've probably increased my net worth now over $1 million. And you know what? Maybe it took me 15 or 20 years to do this or make this happen. But that's the power of what a double-digit return is, and that's actually why you want to earn double-digit returns. Now, this document, it's actually free. If you click the link below, I distribute this to anyone that's interested in actually getting some of my excess deals that I find. I actually partner with people all over the world here through YouTube that watch my channel. If they decide they like me, they watch my videos, then I can show you how to take your assets of 401ks, IRAs that are not producing for you and actually put them on steroids in a strategy and system that can produce significantly more for you. And if you want to learn how to do that, all you got to do is click the link below and basically you're going to go to kriskrohn.com/partnering and learn about what it means to actually partner with me. I guess at the end of the day, the thing that I really want you to walk away with is just this really simple understanding that society has a plan for you if you don't have one for yourself. Society's plan will screw you over. They don't have any real options that can get you where you want to go, which is why so many people are retiring with a job that pays them less than they were earning in their working life. And whatever they saved, they're either hoping that they're dying before it runs out, or a few years later, they're going back into the work market. So I just want you to know it doesn't have to be that way. You're young. Hopefully, if you're watching this and you got time on your hands to do something about it. Be a great budgeter. When you sock your money away, don't lock it up in these stupid vehicles. Set aside and search for double-digit returns that actually have the opportunity to grow your money so that realistically, when you are ready to retire, you can have the money that you want, my friend. It's all in the link below. You can get that document for free. And I look forward to connecting with you and helping you figure out how to get that real estate happening now.